All right, welcome into Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. Thank you for sticking around. We're coming up to that lunchtime hour, Central Time. Let's take a look and see what these markets are doing and see if they've been out to lunch. Let's take a look at corn. This one started off hot, but we kind of slid back down. Well, we gained back a couple of cents here. That's not bad. We're about 4.5 cents off the lows now, but 408 3/4 is last in March corn. We're still down 2.25 cents. 404 1/4 is the low there. So you can see where we've been. And again, we're 7 cents off the highs. If you go out to the D's, that's down 2 cents to 455 1/4. And that's 4 cents off the lows and well off the highs. So we've got a board here that's come back from the depths, but still lower when we started off higher. That's a little bit depressing. We'll see what beans have got in store for us. They're down 6 cents in that front month March. 11.54 3/4 is last, and that too is about 2 cents off the low. You go out to July, that's 6.5 cents lower. Now 6 1/4 cents lower to 11.67 3/4. That's beans for you. Let's move on and see what Chicago wheat's got in store. This is a little bit of a better board now. Finally, we've come to the upside. We've got a 6 in front of the D's. We'll start with March though. 3/4 cent better to 5.84. Look at, we're still well off the highs by about 16 cents. So we've had a big range over there. Let's call it 21 cents. We're just about 5 cents off of it, 4.5 cents off the bottom end of that range. So if you go out to the D's, there we go. 601 is last there. We're up 3 cents. We got a 6 in front of it, but still we're over 10 cents off of the high. So this really kind of came back off down to earth. How about the hard red in Kansas City? From Chicago to Kansas City we go, and Kansas City still struggling. That's the hard red, down 2 1/4 cents in the front month March. 5.75 is last. It's a penny and a half off the low of the day there, folks, and 19 cents from the high. All right, that'll sum it up for you if it doesn't, right? Deese is down a penny and a half to 5.94, and that's a penny off the low of the day and well off the highs by 15 cents. All right, that's hard red in Kansas City. Let's go from Kansas City to Minneapolis and take a look at the spring wheat. That's down 5 1/4 cents up front. 6.54 even is last. That's a penny and a half off the low of the day. Deese is down 2 1/4 cents to 6.84, and that is a new low in spring wheat. Ouch. All right, and then finally, we're going to do the cotton, and we'll get to our guest analyst. Cotton is up 125 points in that March contract to 93.85. We're 136 points better in the May to 94.59. So doing well in cotton. Let's bring in our next guest analyst. That's Tommy Grisafi. He's with Advanced Trading in Valparaiso. I think he hasn't been traveling around very much lately. There he is. Well, Bloomington. Wow, there we go. All right, the farmers selling. What the strong hand is still the short, the big funds. What's going on?
Basis contracts. The farmer delivered corn right at harvest and said, I'm not too crazy about the price. I'll price it later. And rather than put a put under it or do some type of protection, they just assumed, because we've been at higher levels for the last 24, 30 months, that when markets break, they bounce. Now, today, of all things, we have that AI chips are more important than corn chips here. I mean, the whole world's NVIDIA. I look over at my screens. NASDAQ's up 460 points. And for those of you sitting in the back of the room, that is a monster day. S&P, NASDAQ, Dow. Last night, Nikkei made new time high. What's that have to do with corn? The money doesn't want the grains. They can sell grains, continue to sell grains. They know who's caught long. Although it seems like the funds are a big short, the farmer's a much bigger long. Now, after we go through March expiration tomorrow and we go through first notice day next Tuesday, things could change, and they could change quickly. We could have a violent rally in grains, and that wouldn't surprise anyone. So not a lot of money getting super bearish on 3-year lows. I don't like that one. But nonetheless, these are where today's prices are today. And if you have a basis contract in that elevator call, you don't want to roll it into an inverse. And if you don't understand that, you should have never had the basis contract in the first place. Back to you, Scotty.
Well, this is why we talk about things in terms of percentages, right? Because if you go to that NASDAQ board that you were talking about, it's a monster day in terms of points, right? We're up almost 500 points, 467. And just so everybody understands out there, the viewers, to give you a little reference, I'm of the age, and maybe even Tommy is too, that we used to expect maybe a yearly return on your stock portfolio of anywhere between 7 and 10%, more like 8 or 9. And that was a good year, okay? That was a good year.
Absolutely.
We've got that. NASDAQ is up 2.6% in a day, okay? So it's done what I would say at least 25% of your year in one day. I think that helps kind of put a little bit of reference to it to see just how big of a move that is, so everybody out there knows. And you're right, it's because of NVIDIA. We'll come back down to earth at some point in time. We'll see what the Fed wants to do, because it is moving interest rates around a little bit. But anyway, I'm glad you brought that up, and just to put it in reference, again, that's 25% of most people's year in one day. All right, stay there, Tommy.
Right.
We're going to go away. We've got to pay some bills. We're going to come back and talk more Livestock with Tommy Grisafi. He's with Advanced Trading. We'll be right back after this. All right, welcome back in to Market Day Report. This is the one we talk about livestock, right? Let's take a look and see. They've been better, so we kind of like going over to the livestock board. Here we go. As soon as I say it, we're lower now. Live cattle, we still have an up board in Feb, but that's going off too soon. And now that just turned negative. We do have a lower board in April, $1.02 lower, 186.67. This is where we were looking for the joy in the day. We're only 12 cents off the low of the day there. That hurts. October is down 97 cents to 184.45. So let's move along. See if we've got anything better in the feeders, and we don't really. I mean, March is sharply unchanged at 251.35. We've got a dime higher in April to 256.02, and we start to lose real estate. We really lose real estate as we go out the deferred. September's down $1.57 to 269.55. Finally, let's take a look at lean hogs. We'll get back to our guest analyst, lean hogs. Here we go. I should probably leave this one up all day. April's up $2.42 to 88.40, 50 cents off the high of the day, and we got a $1.75 gain right behind it in May. 91.10s last there, 32 cents off the high in May. All right, let's bring back in Tommy Grisafi. Tommy, what's happening in live cattle? What's going on over there?
You know, the truth is, Scott, that the numbers are so low on the cattle. You're going to hear announcements here in the next few days, weeks, that they're going to cut back on the kill. And they're cutting back on the kill because the numbers aren't just there. So that kind of scares people sometimes. On the positive note, the hogs, June's getting towards the dollar mark, and that's just a level that should get folks raising hogs a little bit more excited. Think of where hogs were when we started the year. Think of the volatility we've had in cattle. Grain markets have been going from the top left to the bottom right, and they haven't stopped. Whereas cattle started higher, went lower, exploded higher. Hogs started at horrible prices at the beginning of the year and are almost exploding higher. So interesting times in the commodity market, of course. All eyes on the stock market, because in America, we have an election coming up, and that's how you win elections. Back to you, my friend.
No, it's a good point. And I'm going to talk about this on my show tonight or this afternoon. But
you have a show?
Yeah, right. And we're going to be talking about the NVIDIA. It's now almost its own economic indicator, right? And obviously it came out good. But can we have a stock market that's roaring ahead 2.6% in a day, like I said in the last segment, but still have folks having a hard time? And the answer is absolutely yes. And I think that's going to be something that we're going to have to come to terms with, at least as the Fed will, and maybe even the administration, because we've got people that own stocks and they own real estate. They're really having the best time in their entire lives. And a lot of folks out there that are living paycheck to paycheck, month to month, and are renting and don't own any real estate and have any stocks, they're having a really, really hard time. We're going to talk about that. But I really appreciate you coming on.
Thank you.
Great stuff as usual. That's Tommy Grisafi. He's in... well, he's not in Valpo. He's somewhere in Bloomington, Illinois, I think. Anyway, we're going to go away. We're going to take a quick break, and we're going to come back right after this.